There's so much hype right now around a new trend in crypto called real-world assets. But you know what? Instead of getting lost in all that noise, we're going to cut right through it and get straight to the facts. And to do that, we're going to use a brand new landmark regulatory document as our guide to figure out what's really going on.
So let's start with the big question. What exactly are real-world asset tokens, or RWAs as you've probably heard them called? I mean, it's one of the hottest buzzwords for investors right now, and the whole idea is to bring tangible, real-world value onto the blockchain. We're talking about things like real estate, private credit, you could even tokenize carbon credits. The goal is to make these things liquid and tradable 24/7 for anyone, anywhere. But what does that actually mean for the crypto space?
Well, what this all boils down to is a collision of two worlds, the physical and the digital. And this trend has gotten so big, so fast, that the major financial regulators, they're not just watching from the sidelines anymore. Oh no, they've stepped in, and that, right there, is where our story really begins.
And this is where things get really interesting. For the first time, we have what's basically a new regulatory map, a clear, authoritative document from the top U.S. financial watchdogs, the SEC and the CFTC. And believe me, it's already reshaping how we understand a whole class of crypto assets. And this is our guide. On March 23, 2026, this document was officially published in the Federal Register. Now, this isn't some blog post or an opinion piece from a random analyst. This is the official word, straight from the agencies in charge. It gives us a whole new framework, a new lens to see the market more clearly than ever before.
So, what's really the big deal about this document? Well, it's the introduction of this brand new term, digital commodity. This is an absolute game changer. Basically, it defines a crypto asset whose value comes from its actual use, its technology, and its network, not from some central team promising you profits. And here's the crucial part. This classification legally separates these assets from being treated as securities. That removes a huge layer of regulatory risk that has been hanging over this space for years.
And the document doesn't just give us a definition, it actually gives us a list. You've got the big names you'd expect, right? Bitcoin, Ether, Solana, XRP. But the one we're going to zero in on today is the last one on this list, Stellar, also known as XLM. This new classification gives it a really unique status that we can now analyze with a ton of detail.
Okay, so now that we have this official regulatory map, we can really zoom in. Let's put a spotlight on Stellar and see what this newfound clarity actually means for a project that's already neck-deep in the world of real-world assets.
Now, before we even get back to the new rules, just look at this number. There is already over $1.2 billion in tokenized real-world assets running on the Stellar network right now. This is not some theoretical project for the future. It is a live, functioning ecosystem with significant real-world value tied to it as we speak. And this quote from B in Crypto just perfectly sums up the impact of that Federal Register document. This official commodity classification gives Stellar a serious edge. I mean, in a market that is just desperate for clear rules of the road, having this kind of green light from regulators is a massive advantage, especially when you're trying to attract the big institutional players.
Okay, so what does all this mean for its price? Instead of throwing a confusing chart at you, let's just break it down nice and simple. Analysts are watching two key price zones. If the price can get above about 17 cents, that's the first really bullish signal, with a potential target up near 23 cents. On the flip side, if it drops below 16 cents, well, the price could stay stuck in its current range for a while. Those are the levels to keep an eye on.
All right, so that's the here and now. But let's look ahead. Let's talk about the future. What are analysts actually predicting for Stellar's value now that this huge piece of the puzzle, regulatory clarity, is finally clicking into place? Well, one analyst, Crypto A-Man, he's put some specific numbers out there. For 2026, even in what he calls a pretty mild market, he's looking at a target somewhere in the $1 to $2 zone. Now, considering where the price is today, that's a pretty significant jump.
But what if you look at it from a different angle? That same analyst did a calculation. If Stellar were to reach a valuation that's similar to its main competitor, XRP, that could imply a potential price of $3.85 per XLM. It just goes to show how much potential room for growth people think there could be. And you know, in a full-blown bull market, that's when the conversation gets even more wild. If Stellar were to capture the kind of valuation that a major network like Ethereum once had, some analysts are suggesting the price could even push into double-digit territory. Now that is a seriously bullish outlook, but it's rooted in this idea of a major market reevaluation.
But all of this comes with a really important word of caution. The analyst Crypto A-Man warns that with the market looking a bit shaky right now, fear is running high. And his message is pretty simple. Don't sell in panic. He argues that it's precisely these moments, when everybody is scared and sentiment is at its lowest, that often come right before a major turnaround.
So let's zoom back out. What's the really big takeaway from all of this? We've gone from a hyped-up trend to a specific asset with a clear regulatory status and some pretty wild future predictions. This whole journey kind of reveals a new framework for how value might be determined in the crypto market from here on out.
And this slide just sums it all up perfectly. It starts with a hot trend, right? Like real-world assets. Then, the critical step. Regulators step in and provide clear rules. With that clarity, we can analyze an asset like Stellar based on new, solid fundamentals. And once we do that, the long-term potential starts to come into much, much sharper focus.
And all of that leaves us with one final, really important question. For years, the crypto space has been wondering what it would take for mainstream finance to truly, finally come on board. So you have to ask yourself, could this exact kind of regulatory clarity be the bridge that finally makes it happen?